Okay, good morning. Mike and David here today on the morning show. We're going to hit some interesting topics. Airline stocks are in the news. I'm seeing things on Southwest, seeing things on Spirit. So I'm going to show a couple airline stock prices, and you may or may not ever want to invest in them. And then I'm going to talk about something else I see in the news that I got to experience the other day, which is the alternate virtual reality glasses, goggles, whatever you want to talk about. And I'll share that. And then David's going to hit something that definitely hits you as a homeowner, which is escrow accounts. Whether you pay your tax and interest or tax and insurance out of an escrow account or not. Before we get started, I will remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and David's alone. So I will start with airline stocks. I know we talked about this topic several months ago. There are lots of stocks out there, and I'm going to share my screen in a moment. But the quote I always remember, I think it was Warren Buffett, I don't know, at least he gets attributed to it. It said, if you want to become a millionaire in the airline business, you start off as a billionaire, you invest in airlines, you will become a millionaire. So, and when I show you the stocks, it's the same thing. So I will start off with a disclaimer. There's no airline stocks in our models that I'm aware of. But they are certainly in things like the S&P 500 buried in there. So I'm going to start off with showing, let's see which one I had up first, American Airlines, and they came out with some good news. That's why their stock's up 2.5% today. Only 6 months, I think, ago, they fired their chief commercial officer as far as they had tried to go to direct billing. But when you look at an American Airlines, and I fly American, I fly Delta, Southwest. I mean, there's some that tend to be out of my airport of Cincinnati. But when you look at this stock, and what I'm showing you here is the all graph, which is very ugly. If you invested in any time in this airline before 2020, you are down by at least 50%, maybe more. But even on a year-to-date basis, you can see at the beginning, we're almost back to break even on the year. So, it's been somewhat of a ride, went up for a while and then just totally dropped, brutally dropped. But American Airlines is almost back to break even, and that's in a year the market's up, 20%. Another one that's been in the news is Southwest Airlines. And when I did my MBA, we did a case study on how great Southwest was. That was back in like the late 1990s. And certainly it looked good for a while, but even if you invested in this company in the last 5 years, you're probably down, 50%. So Southwest, and they're in the news because they have an activist takeover or trying to get some ability to influence the board. Southwest has that model where you don't have an assigned seat. I think they're moving towards the assigned seats like everybody else. But then the one that's really been jumping around the last 3 or 4 days, and if you are like a day trader, which we are definitely not, Spirit Airlines has been the interesting one. So here I'll pull it back to a month-long chart. This stock was down to $1.50 a share, and it is surged up, let's just say 100% in the last 5 days. Why did it go up? Was it because their business model changed or they were suddenly profitable? It's just that they avoided bankruptcy right now. So they've got enough money to get through a little bit further. Very, very dangerous stock. I mean, yes, if you bought it a week ago, you'd be up 100%. If you bought it any time before that, you're down about 80%. So here's their year-to-date graph, kind of brutal. 5-year graph, equally bad. You could have bought this thing at $40 and you're down to $3. So that's like a 90% drop. So it does prove what Buffett says as far as airline stocks. If you're invested in the stocks, they have not done well. Some of the reason why they don't do well is there are so many of them. I think there's 10 major airlines, 8 to 10, some mergers, some bankrupt. And what happens is they go bankrupt, wipe out all their debt, and then they come out and they have fare sales of which all their competitors must match, and then they take their turn going bankrupt. And then the other thing within airline stocks is it's essentially a commodity. When you make that decision to fly, there's, let's just say 3 or 4 choices. You'll usually choose the least expensive one. You may have some loyalty, but that's kind of a commodity. So airline stocks in the news. Another thing in the news, and I got to experience this for my kid's birthday, which is AR VR glasses. So got to do this thing at Sandbox where we got to, 6 of us got to fight against zombies, and we put on the glasses and we had our fake guns. And once you put those glasses on and the simulation started, like, you were involved. Things were attacking you. You were shooting. It was a lot of fun. You could see your teammates. Even though you're in this virtual reality world, you can see your teammates next to you. And if one of them died, you could lay your hand on them and bring them back to life. It was a cool experience. A lot of fun. Within 5 minutes of when it ended, they had a video in our email and to our text that we could watch, like the highlights of this thing. And when you watch the highlights, you're like, oh, I'm in this world. It's so cool. And then, of course, they show you also what it looks like in the room, like in real life, and you're all like standing around, pointing at things. You look so foolish. But anyways, it was fun. So Meta and Snap believe AR glasses are the future of computing. And whether I say that, I believe it's at least part of the future of computing. I don't think it's the only thing. But, going through this experience, I was like, someday you could watch a movie from this perspective. You might be able to watch a movie from the perspective of the hero, or whoever in that movie. It will be game changing because it's just so much more engaging. So, as far as virtual reality headsets, Apple has one out, the Vision Pro. It's like $3,500. That's too expensive. Most people aren't going to buy those. I have a kid that gets to use them at college. But Meta came out with theirs, and I want to say it was like about $500. So now we're starting to get into a reasonable, price for that experience. And then I saw another one where they're going to actually rent these, or $99 a month for these AR glasses. And that's what it is. As they produce more of these, as the content gets developed and they monetize them, I do believe this will be part of the future of computing, along with, all of the AI and all the exciting things there. So with that, I'm going to turn this over to David, and he's going to talk about escrow accounts.
Before I jump into that, I have a couple of questions for you. So
Sure.
For the VR, when you say you saw them, did you see them in the game, or did you actually see them through the glasses?
No, we actually saw them in the game. Like,
Okay.
you could turn, and you could even see, like, my wife is taller than my daughter. Like, I could, she was taller.
Okay.
She, and then across everyone's back, it had their name. So you could actually see their name too. And you had, devices on your wrists and on your ankles, and obviously on the guns and your helmet. So you raised your hand, you could see arms move, you could see, everything. It was, I want to say it was, $50 a person, something like that. It was very cool. Definitely something I would do again.
Did you get some motion sickness from it? Because every time I've done virtual reality, I take that headset off, and I'm so glad to take it off.
No, I didn't, and actually none of the 6 of us did. Everyone was just like, I mean, they were fine. It took a while to get it started, but no, we didn't get any motion sickness. We only did it for 30 minutes. If you did it for a few hours, maybe, but I didn't get any motion sickness.
Okay. Well, because I think it's interesting, because yesterday I was seeing headlines that Apple's going to cut back on its Vision Pro
Well, it's probably because
production.
it's too expensive. I mean,
Yeah.
$3,500. I mean, that's not realistic for any, like, average person to spend on.
Right.
Where where you start getting things down to $500, and that's the cost of a PS5 or, the
Right.
gaming consoles, or, $500 is reasonable. 3,500, it passes a certain threshold where you're going to eliminate a lot of consumers.
Yeah, that's true too. Okay, well, I appreciate you answering my questions. So escrow account. So this is a strategy that I employed for myself. And Mike, if you want to push back on me a little bit, feel free. So I closed my escrow account for my house, and the reason why I did it is because two things. One, the most important thing is I don't like getting a letter in the mail saying your mortgage has gone up because you did not pay enough towards your taxes or your insurance and we have adjusted your rate. So I don't like uncertainty when it comes to something that's that expensive. I want to know what it is in and out every month. And so that was the first thing. And then the other thing was I don't like giving an interest-free loan to the bank. It's like they're holding that money, I can pay it for myself. So those were kind of the two things that kind of led me down into looking into closing my escrow and kind of what's the benefit of that. And one of the big benefit for me is I can put that money to work to where it's either growing or it's paying off. And then at the end of the year, I can pull that money out and I still have money left over. And so the compounding effect of that was the big driver for me in closing that escrow account because I want my money always at work, and that's usually what I tell people is like your money's always at work. The question is for who,
Hmm.
And so is it if you can't answer that question, then uh it's probably not working for you. And so for me, those were the big drivers of it is I didn't want to um I didn't like the surprise that I got in February, stating, "Oh, your mortgage has gone up by $600 because you were short on
Oh.
your property taxes this year." And it's like, wait a second, okay, that was supposed to be calculated in. But so so the when can you close your escrow account if this is something that you want to do? You can't have PMI insurance, which means you have to have 20% towards the home, 20% equity in the home, and you have to have, at least in my case, in the bank that I was dealing with, the account has to be open for at least a year. So we bought our house uh, on May 10th of 2023, and on May 11th of 2024, I called them and closed my escrow account.
Hmm.
And so all the money that I was putting towards my mortgage, I I now have pulled that out and I have in investments, I have in a high yield savings account, earning interest, paying, growing, so that I can pay that stuff myself. Because when I first came to work for Steve, Steve put it in such a succinct way to me. It's like he's like, Dave, when you're talking to people about retirement, the question is how do you know when they can retire? And the answer is when their investments pay what their paycheck pays.
Hmm.
And so that allows you flexibility. And so building up those accounts, getting those kicking off money, if my investments are paying enough a year to cover my insurance, now I'm not having to work to pay my insurance or my property taxes. What do you think, Mike?
Yeah, well, I think the escrow account, and I've had both, and usually it's driven by what the bank requires. Sometimes the bank said you must have an escrow. I mean, it's been 10, 15 years, but the last bit they have not required, and I have not had an escrow account. The tick and tie person to me that wants to know every dollar and every cent, understood the escrow account, and they had to keep at least, 1 month's payment in there, and then you would contribute to it, it would build up, and then you would pay off your taxes or you'd pay off your annual insurance amount. And I kind of liked it because it just made my monthly expense the same. Uh, Obviously, when your insurance goes up or your taxes go up, they have to adjust. And what happened to you is they adjusted too slowly. So then you get caught making the backup payment. Now I'll give you the other side, which I have now, which is I have to go and write a check because if I charge it, they charge me a fee. So I actually got to write a check, which I rarely do, and I got to write a check for thousands of dollars every 6 months. I know I'm spending the same amount of money as if I had an escrow, but it's painful to write that check. I don't know. It just is. It's a painful to write that check to the Warren County Treasurer's office for thousands of dollars. So I can see both sides. I will say that if you are a person that likes a steady bill and steady, what each month is, the escrow probably is actually better because you don't
Yeah.
have that every 6 month boom. Now, what David said as far as investing your money, you are giving the bank essentially a loan. Now, when high yield savings accounts paid less than 1%, who really cares?
Right.
1% on 2,500 bucks is $25 a year. That's not even worth worrying about. But when you start talking 5% on that, it starts becoming like, yeah, I want to get that money and put it to use. Would I put my escrow dollars that are about to pay my insurance or taxes into the stock market? No, I would do that. I mean, that would not be the way to do it. But so I can see both sides, but it's kind of what your bank requires that you do. And then the other thing is when the bank like pays your insurance every year, you tend not to go out and price shop because you're just like, oh, they pay it. When you pay it yourself, like I do, you tend to be like, okay, I'm going to price shop this to get the best deal. It becomes more, you're a little more sensitive to it. So that'd be my
And
pros and cons.
yeah, and I agree on the insurance and the price shopping. I mean, my wife and I sit down and do that every year. Are we getting the best deal? Is there a better deal out there?
Yeah.
And we shop it out. Um,
And
because we want the best deal. I mean, everybody's going up what, 15, 20% on insurance right now? I mean,
well,
that's a big hike.
auto insurance for sure is going up 15-20%. Homeowners, I'm not sure it's as much, but keep in mind the value of your house has went up the last, with inflation has went up. So guess what? The value of your house goes up, the
Your
cost of your
insurance.
taxes goes up, the cost to insure your house goes up. It's kind of like inflation passed all the way through. So, I know that I'm going to get a higher tax bill and like, oh, I don't want to
Yeah,
pay $200 more. My house is worth more. It's the effects of inflation. It's just
yeah.
kind of a delayed effect. So,
Something interesting to think about, if it works for you, I would put the caveat is if you can't put money to the side, if you pay your paycheck down every month to zero, don't do this.
yeah, yeah, exactly.
Don't do this, because then you could be in trouble. You don't want to go take out a personal loan to pay your taxes and insurance. No, no, no,
No, and you don't want to put it on your credit card. And
no.
I mean, and my taxes, they like if you just charge with your credit card, or I think even swipe with a debit card, they charge you like 2%. So like that's why I have to write the check. But
Yeah, well, I was looking at mine yesterday. If you use a credit card, it's a 2.15% fee, processing
yeah,
fee. I'm like, oh my gosh, I'll write the check.
exactly. I mean, I'm just using mine. Say $2,500, 2% is it's like $50.
Yeah,
That's like $50. You're just like, you don't want to give them the bank a loan. You don't want to give your credit card company a $50
no,
freebie.
sure don't.
So,
Oh, and see, now we only pay ours once a year,
see,
so
ours is twice a year. So,
yeah, we get to pay it once, at least as far as I know. So, uh,
you hope if maybe you're supposed to pay it twice a year, and you're just finding that out. No, I just and it is important to know, at least my taxes, I assume most people's property taxes, you're actually paying in arrears. So you're paying taxes on the previous year, which allows you to sell your house and not like stick the new owners, or if you're buying a house, you're not getting stuck with a tax bill that you shouldn't have. So, anyways, all
Interesting.
right. Well, thanks everybody for coming on today. We will have a great rest of the day. The market's rebounding some after yesterday's sell-off. As we've kind of stated, is expect volatility. Volatility, I don't know, is necessarily caused by the election yesterday, but certainly the uptick in the 10-year bond rate, which we covered a couple days ago, as well as there's a concern that either political party may spend more than the country brings in and run up our deficit any higher. Yes, everybody promises spending. So, we'll just say that hopefully once the elected party gets in there, they'll be like, okay, we got to stay on a budget of some sort. So with that, we'll talk to y'all later. Bye.